Good afternoon, everyone. Give me Scanty. I'm thrilled to be here at the AUHF to be discussing student housing. I'm happy that we had Akon speak on the same topic earlier, and so I'll just be following on that discussion. Unfortunately, I also have the task of keeping everybody awake after lunch, so I'll do my best. Do I have that? Who's in? Thank you. Yes, so my name is Prosper Ben. I work with Family Homes Funds. For those who don't know, Family Homes Funds is a housing impact organization set up by the government of Nigeria to tackle the housing deficits that we have in our country. And we've done that to great success so far. We've delivered about 19,000 housing units in the short time that we've been here. And that's not what I'm here to talk about at this point. I'm going to be talking about student housing and the deficit that we're facing in Nigeria, and more specifically, what Family Homes has done to address that student housing deficit. So yeah, there's a student housing crisis in Nigeria. We have about 2 million students enrolled in tertiary institutions. However, we can only accommodate about 15% of those in on-campus student accommodation, which means that the remaining 85% have to live in informal housing, inadequate housing, have to contend with insecurity, have to contend with rising risk and other market factors. The average Nigerian student will spend about $1,000 in a year on living costs when they live off campus, and this is what we have to deal with. So this is something that Family Homes has taken up dearly and something that we're seeking to address. So why does student housing matter? Student housing is the foundation for learning and inclusion. We talk about bridging the gap between low-income households, providing housing for vulnerable populations, vulnerable segments of the market, and when you have youths from these households go to school, the basic need and the primary need is shelter. From shelter, you then build on that, and that becomes the foundation for learning. That becomes the foundation by which they can then focus on their studies, they can then be integrated into society, and they can be included. So well-being, student well-being, that's important. That's something that we need to think about, and that's why providing student housing matters. And when I speak about student housing, I also want to focus on purpose-built student accommodation. Because yes, there's housing, but the housing has to be fit for purpose. It has to be fit for the needs of a student. Why invest in student housing? As an asset class, I'm not sure how much you know about the bankability of it, but I can tell you that it is very profitable. It is very viable when done well and when done right. Demand, the first thing when you're talking about any viable project or any viable asset class is pairing demand and supply. And when it comes to the demand with students, you understand the enrollment figures across Africa, literacy numbers, literacy rates is going up. So we understand that more students are being enrolled every day or every year, and these students are going to need housing. As an investor in the space, you can easily forecast and project what the market is going to look like, what the demand is going to be in the next couple of years, and this also extends across Africa in whatever region you're investing in student housing. The demand is recurring, there's clear growth potential, there are stable occupancy rates, and most importantly, it's very resilient to the market. This is why we need to invest in student housing. This is why Family Homes Funds has decided to focus on student housing. So yeah, we're investing in student housing. I don't need to preach about why we need to invest there, but then what are the constraints? Why are we not doing more of it? Why is there a deficit? The deficit is in Nigeria, but it extends across Africa, even in Kenya, even in South Africa. We've done our studies and we know that there's a deficit of on-campus and fit-for-purpose student accommodation. So what are the constraints? In Nigeria, and I'm sure this also extends in other parts of Africa, there's a capital access gap. Currently, the funding that's attainable or that's accessible for student housing does not match with the demand or what the market can afford. You have commercial finance rates at 25 to 30%. In Nigeria, you have cases where construction finance loans are at 35%. You need long-term, you need patient capital to be able to deploy student housing sustainably. Then once you deploy it, the next thing is fixing the affordability gap. Students from lower income households cannot afford the prevailing market rates. So we need to address that. Whatever you're deciding, whatever you're financing, whatever you're developing, has to be able to target the large segment of the market. So I'm talking about students from low income households, students from vulnerable groups. You need to think about the demand there, because you're going to design a student housing project that excludes majority of the demand, then it's already ineffective. Then institutional weaknesses. In Nigeria, we have, I would say a well-advanced concession framework. However, there are still holes and there's still work to be done. There's an absence of a national strategy focused on student housing that carries along all the institutions, all the stakeholders, and allows us to focus on one objective and align our goals as well with meeting that objective. There's a lack of data. We've spoken about that as well. There's a lack of data in that sector. We've talking about how there's an asymmetry of information. So there is data, but the data is not shared. There's no central repository. Everyone has data on their failures and their successes, their experiences. However, we don't all share in that information. And then you have delivery risks. If you're going to invest in student housing, the first thing is you would need to be able to deliver that on time. You have construction finance loans that have tenures. You'd have to deliver your projects within that time frame while still meeting with their next academic calendar, because that is very important in pairing your project to the demand. If not, you end up with periods of 100% vacancies, and that's the beginning of a failed project. You then have to restructure, you then have to seek for additional mezzanine financing or something else. And these are the things that constrain the market. This is what limits further investment in student housing, at least in the case of Nigeria. So what has been FHFL's approach to student housing? The first thing is, one, whatever source of funding has to be low cost. Secondly, it has to be long-term. Social infrastructure, such as student housing, requires long-term patient capital. That is essential, that is key. It is very critical to the success of any student housing intervention. Secondly, it needs to be affordable. I've spoken about affordability gaps. When you're designing or how we've envisioned our programs, we have to ensure that we're able to target most of the market, and most of it is not excluded. Finally, it has to be scalable. We've spoken about affordability, I've spoken about scalability here. Akon also spoke about scalability and how they raise funds as well to do that. But whatever system you're deploying, you need to be able to replicate that quickly. You need to be able to accelerate scale to be able to meet the deficit. If not, you're always going to be chasing the fox that's ahead of you. And these are the four things that come together to give you a sustainable student housing framework to be able to deliver at scale, deliver in mass. To do this, we did some research with friends at AHI, also the French Development Agency, AFD. They sponsored this. And we're able to look critically into how other nations or how other stakeholders have intervened in student housing, how they've delivered it sustainably. We took parts of their own stories that could apply to Family Homes Funds or apply to Nigeria, and then we implemented that. And we've taken action. I'll be glad to say that in 2024, we, as Family Homes, committed $41 million to finance the National Student Housing Program. Now, this program is set to deliver over 38,000 bed spaces, of which about 12,000 are in construction as we speak. This was last year. We're hoping that by the end of next year, we would have fully started work on all 24 projects and on the path to deliver the full 38,000 bed spaces. So I'll tell you how we did this and the levels we put in place to make this possible. We've spoken so much about blended finance, and so I'll give you our own little example. And I'll start with saying this. It is very important to access the kind of capital that catalyzes more financing in the space. And for whatever it is you're doing, whether it's affordable housing, and we've done something similar for our mortgage products, and whatever type of housing intervention you're doing. For us, we're able to receive about $21 million as grants from a body, and that was able to catalyze private sector capital into the program. Family Homes provided 63% of that as concessional loans, and the product of that is that we're able to bring down the cost of capital to less than 11%. At the time, or currently in Nigeria, those who are doing construction finance loans or who are in housing development will know this, it's a cost of capital. The next thing is, how do we then deploy those funds? It's one thing to seek the funding. It's another thing to deploy those funds in a way that is, like I said earlier, scalable, in a way that is effective and viable. The first thing is the land. We've spoken so much about land issues here. So for us, it was very, very important that all the accommodation that we're financing and the program had hostels that were on campus. Like I said earlier, there's an associated cost with students living off campus. There are transport costs, the additional living costs that have to do with setting up the place, especially when it's not fit for purpose for students. We need to eliminate those costs. That means housing that's on campus. And to be able to achieve that, we needed universities to concession their land for developers to build on campus. We're able to guide in that process, and we've done that effectively. The next thing is concessional loans. Family Homes providing loans that then allow the end product and the end beds to be affordable for everyone. We did that. And then the developers had to then provide instruments to guarantee delivery. I'm talking about maybe advanced payment guarantees, performance bonds, and the likes. Family Homes still did the hand-holding through this process, guiding developers, guiding partners, guiding commercial banks on how to engage with us to be able to achieve this program the way we had envisioned it. And now for scale, standardization, that is key. So what we did, across the program, all the designs, all the buildings are identical, nearly identical, save for changes in structural drawings from soil conditions in the different areas that we're developing. And so by doing this, we're able to estimate what the project cost will be across the program. We can estimate what the input elements would cost. We can tell you what cement would cost for the entire program. We can tell you what iron would cost, what the furnishing would cost. And once you're able to do this, you then open up the world of possibilities in terms of structuring the project to ensure that it's resilient to inflation and the volatile environment that we currently live in. Based on that, we're able to start speaking with OEMs, speaking with manufacturers, speaking with other players as well, seeking how we can get or lock in prices for all these inputs across the program length. In some cases, this might mean paying down for them in advance. And there's something important here as well. By doing this, you're boosting the local markets, you're contributing to job creation, and you're boosting the economy. And that's something that Family Homes takes pride in. That's an impact indicator for us, how much jobs created, and how we're able to plow the money back in the local economy to also enrich our citizens. So what's the path forward for us? For now, we're looking at expanding. In the next 2-3 years, we're looking at delivering an additional 30,000 bed spaces across Nigeria. To do that, it means new capital sources. We currently have a credit line from the AFD for 30 million euros to be deployed solely for student housing. This will kick off another tranche of investments in the space. This will kick off more, or also most importantly as well, make the end products affordable for most of the markets, which is also very key for us. And like I've spoken about standardization, beyond standardizing the buildings, the drawings, and the technical drawings, we're looking at standardizing the entire process. These accounts, agreements, legal frameworks with all parties on a program approach. This allows us to accelerate scale. We don't have to be bogged down with the details of each project when we know that there's a boilerplate for the entire program, boilerplate approach for the entire program. And then most critically, partnerships. Family Homes is very big on ecosystem solutions for the housing space, or the housing sector. We're all of different ilk here in the room, regulators, banks, developers, DFIs. Not one person has the solution alone. We all have to work together. And this is very key for Family Homes Fund. With everything we do and our approach to everything, and I'm sure Ahmed as well, who's speaking after me, would also elaborate on that. We rely on partnerships, we rely on collaboration with institutions that have like-minded objectives. And this is the only way we can solve our issues. So what are our lessons? Very critical, capital. The source of capital, the first loss capital. Grants, in our case, served as the first loss absorber that catalyzed equity into that transaction. It made it more affordable. We're able to crowd in other sources of funding. And I've spoken about the AFD as well. That's also a product of this. You need that capital to catalyze more, essentially. And you need to identify what that looks like and where you're getting it from. Next thing is pricing for inclusion. Rents must stay affordable. For us, we are impact focused. It is, we cannot imagine, sponsoring a program or financing an intervention that does not cater to those who are vulnerable in society. And these are, for us, look like, youth from low-income households and, just anything low-income households. We have to cater to them. They make up most of the market. And so whatever we do, we need to think of that. Something that we've employed in terms of pricing for inclusion, and we're looking to also expand and do more of in our further projects, is cross-subsidizing. Going forward, we're looking to subsidize tiered bed spaces. And so we have social tiered bed spaces, and then we have the higher tiers, actually 3 tiers, actually. But then for the social tiers, this would cater specifically to students from low-income households. And then to be able to keep those rates affordable for them, we're going to offset that with the rentals from the other tiers. This is an approach that, I implore all of us to investigate and see how we can introduce them in our systems. I know our counterpart from India also spoke on something similar for housing. The other thing is local capacity matters. We have to equip local developers to access financing. They need to understand what it means to develop sustainable housing. They need to understand how to meet up with scale. They need to be equipped both financially, and also technically. They need to understand this. Project preparation is important. Technical assistance is important. Building that technical capacity for them as well is very important. And that's something that we've learned as well, and something we're also doing going forward with. Finally, policy engagement is very crucial. We can speak here as non-government players, but government is necessary. The policymakers and diplomats and politicians are all very important in the process of doing this. We need state-level buy-in. I spoke about our conversations earlier in designing this program and how we required concessions to be done easily. We have a body that's responsible for that. In our case, we have a few institutions like the National Universities Commission and Tertiary Fund that provides grants. We have the Ministry of Education. These are all bodies that have come together from the government side to ensure that this program works. And I think that whatever we're doing in intervening in housing at scale requires government intervention in some form, just engagement in understanding what the problems are and what they're facing. Oh, so that's all from me. I thought I had more, but Happy to keep this brief. Thank you very much. Yeah, sure.
Do you have any questions?
Very interesting program. I was wondering are these all public universities?
Yes.
Okay.
Yes.
And who will be responsible for managing the facilities once they've been completed?
So when they drilling down to the transaction framework, something we've required is that there's a third-party operator that is contracted to manage the hostels. That third-party operator could also be owned by the developer, but we want to allow that separation so that if there's a failure in services, they can be terminated.
Mm-hmm.
Yeah, so that's...
Okay, great. And then my other question is, one of the things that had come up with other student housing projects we looked at was the disparity between the new buildings and the old buildings, which were usually in a pretty bad state. Has there been any thought to incorporating some funds in order to bring the existing buildings up to some acceptable standard?
Yes, thank you for that question, actually. So in the next phase that we're looking to deploying or delivering an additional 30,000 bed spaces, we're actually considering that approach. It's something that we've considered, but to kick off, we couldn't do that. There are other social issues there because currently the rates for the old builds, especially when they're provided by the universities, are at very, very subsidized rates and are not commercially viable. And so you contend with displacing students who already have housing to then upgrade the facilities. So designing around that is key, but it's something that we're looking at. Thank you.
Could I ask you your return on investment from your funding model? What are you looking at?
So for us, as Family Homes Funds, we sit on the side as financiers. So the return for investment for us specifically is just limited to our lending. However, for the project IRR, which is something that we look into to ensure that the project is viable, we look at a hold rate of 15%. 15%.
Yeah. And the reason I ask is because your model only mobilizes 12% of equity.
Sorry?
Your model, you mobilize 12% of equity.
Yes.
25% of subsidies, government subsidies, remainder of concessionary finance. I just wonder if what one is doing is one's mobilizing this soft money, if I can use that terminology, deploying it into the market and enabling people, your partners, that you make funds available to generate sort of substantial profits. And I wonder about the ethics of that, because you're essentially using soft money to enable a substantial profit to be generated. I was concerned, for example, prior to lunch, when they spoke of 38% of return on investment. And I just wonder if it's necessarily that ethical to have your model so dependent upon soft financing. Yeah. And then it's the surpluses which are generated are going into the pockets of the private sector. And I'm just wondering, maybe there should be some payback or some monies paid back into the concessional financing institutions, etc., as opposed to just draining the profit for your partners. Just a question.
Okay,
I know you've got to have a good return on investment to raise capital from the open market, but in your model, where only 12% is raised, I'm asking the question.
All right. So I have my colleague who wants to answer that, and I will chip in when she's done.
Exactly, because you have the nitty-gritty of the model, but there is an overarching, I didn't attend the master class, but from what I heard from my colleagues, blended finance is not meant to stay, it's meant to catalyze. So we are government. When you look at the presentation, you may believe we're developers, but we handhold the developers, we handhold the whole value chain to catalyze student accommodation on campus. So there's a concession arrangement. The whole operation reverts to the university after the concession period, and operator goes away. So that borders on the ethics, but the universities don't have the capacity to start it. So we need private sector, start it, run it, and hand it back to the university, at which point the whole return goes back to the university coffers. Ben, over to you.
Yes, and to add to that as well, so the universities are also shareholders. They're giving a percentage of equity in the SPV setup for each project, and they don't actually provide any cash. So that ends up being sort of some form of payback to the university.
Thank you. I'm encouraged. Thank you.
Thank you.
That's all the questions we'll take. Thank you so much.
All right, thank you.